Well, what's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 4th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to have a blunt, honest, one-on-one conversation with you guys and try to answer a big question in the minds of a lot of people in the Bitcoin and crypto community. And that is, why does it seem that Bitcoin can't catch a break? Now, I know a lot of people will probably jump to the conclusion that a lot of people have been discussing, which is the recent sell-side pressure that we had from the German government, from Mt. Gox, a lot of big macro sell-side events. But I think there's another important piece to the puzzle. It is not just a question when you're determining price of supply in the market, it's a matter of demand. And I think this is probably the more concerning end that we have to discuss. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick things off. I'm not here today to spread a lot of fear, guys. I don't want to kind of get straight to the point, keep this video relatively short. Since we last spoke on Monday, Bitcoin has continued to dwindle down here. It's struggling on its short-term 4-hour time frame moving averages after setting in a lower significant high back here in late August from its prior relative high in late July. So coming up here on nearly a month later, we set lower highs and we're still dwindling lower and spending more and more time towards that lower range. Not to mention, as you all, if you've watched the channel frequently, there's other longer term moving averages, the 21-day pocket, the 100 and 200-day. We're spending time much closer to those long-term moving averages, and it's a signal that we are weakening in the trend here. Now, obviously, there was a lot of sell-side pressure here. I'm not going to negate that fact. Mt. Gox distributions, the German government selling, these are huge sell-side events. But the thing I want to bring to your attention here is something much more concerning, and it is the much more important part of the equation when it comes to determining where price is going to go long-term, and that is the demand side. Who is going to be the next set of buyers, the next wave of people who will actually come in and market buy Bitcoin? And essentially, what I mean by that is they're going to buy Bitcoin at the best available price, and they're coming in with sizable capital enough to outweigh sell-side pressure. Right? So that's the question we have to ask. And I know a lot of people will probably say, well, we've got the Bitcoin ETFs now. That's the new catalyst. That's the narrative. That's what's going to allow Bitcoin to recover here and be able to really kick off a new bull market, maybe going up to $100,000 or more, if not. And whatever happens beyond that will happen, right? Whatever it's going to be. But I want you guys to remain a bit skeptical of that, because there are a lot of people telling you that that's going to happen. I want you to take a look at these numbers here. Now, this is from HODL 15 Capital. Good page. You should follow them over on Twitter. But essentially, like a couple other profiles on X or on Twitter, essentially they compile all of the data around the ETFs. It's publicly available knowledge, but sometimes it can be difficult to pull the information off chain by yourself. So it's good to use these nice graphs here. And I want to go ahead and get straight to the point here that essentially from the close of July to the close of August, I just had it back a couple days ago, we saw less than 1,000 new Bitcoin being added to the ETFs during this period of time. And mind you, this is a period of time where the US government's been selling some, there's been Mt. Gox distribution still going through the German government. The ETFs have not been accelerating massively. Now, between June to July, we did see, again, initially throughout that month, a good amount of Bitcoin demand coming in the ETFs to match that sell-side pressure. And that's why we haven't had a significant collapse with one of the biggest distribution events in crypto, which is this reimbursement of holders of Bitcoin who were using the Magic the Gathering online exchange, or Mt. Gox as it's more commonly known. During that period of time, we had buyers coming in. But the month following, we've had practically no inflows coming in here. And this is very concerning here, guys. This is not, again, I really want to echo this here. I understand some people have disagreements of opinion, some people are more bullish, some people are more bearish. There is no way to cut it here, guys. This is the last major final narrative that really can drive crypto from what I can see. And I've been in crypto for many years. I've traded in financial markets since 2011. I started investing in cryptos in 2016, 2017. And for me, to see that this is the ETF, this is the moment where Bitcoin is becoming that mature, institutionalized asset. We finally have it. And multiple months down the line, we're now getting to a point where those inflows are really drying up. A good way to visualize this here, right, just show you I'm not trying to like spread FUD or focus on 1 month's worth of data. 1 month is not the end of the world. But the problem is that while we had a very strong quarter one from January, February, March, where we really saw those inflows coming in a month where we had 116,000. Even with people outflowing from GBTC, net overall, we had new spot Bitcoin being stored in these ETF products. And now we see in April an outflow of 6,000. In May, a decent month, around 29,592. In June, 8,700. In July, again, coming to that sell side pressure that was in the market, definitely helped buoy price. It probably would have been a lot worse, right? Now, here this month, less than 1,000. And I know a lot of people will jump to the conclusion, and they'll say, Nick, GBTC is still outflowing. We can't really factor these numbers in. This doesn't really count. And it absolutely does. And the reason why it does, guys, and I say this so importantly, is because the GBTC product had already existing spot Bitcoin in there. And the thing is that so many people don't realize, they'll say, well, IBIT is increasing its numbers, or they'll point to whatever ETF is generally going up to justify it. But the thing is that those Bitcoin that are going in there are very likely coming from GBTC, because GBTC's product is much more expensive. So people are slowly but steadily, month by month, getting smart, rotating their money, and getting it essentially into a lower cost ETF with a much smaller maintenance fee. Right? And that's essentially what's been happening here with these outflows and a lot of these supposed new inflows to IBIT. It's why we have to look at the entire spreadsheet here. This is the most honest way we can do it. And when I look at this and I see net overall, that we are seeing less than 1,000 Bitcoin being added in the past month, that is showing me that the buoy of support that the ETF used to provide here during the sell side event is no longer. And if we start getting a lot of whales coming in here, a lot of long-term holders who want to sell, that is not going to be good for Bitcoin's price. The price action is already showing it. This weekly candle here, the inability to get above those short-term moving averages, another engulfing candle here. I mean, we've had multiple lower lows and lower highs here. This to me makes me not only believe that you're at a minimum probably going down here to the 50K range to touch that general line of support over time, but beyond that as well, we could be going even lower, because the more fundamental question that should be on your mind and on the minds of everyone, it's on my mind, and I know it's on the minds of many long-term holders of Bitcoin who already have stacked a ton of sats, a lot of Bitcoin. They're sitting there wondering, who's going to buy Bitcoin next? Right? A lot of people probably hadn't been thinking about that, because Bitcoin has always gone up and to the right. It's always been one of the best performing assets. But now we have the ETFs. We have international ETFs, many of which are neutral or negative. We have every single kind of exchange you could think of out there, from consumer exchanges like Coinbase and Binance, OTC desks. You have families and hedge funds who, if they want exposure, they can get it. Pension funds can now get exposure to Bitcoin. What is going to be the next wave of capital that's really going to drive this? And I'm not here to say that over the absolute long term, guys, if we really zoom out here, that Bitcoin can't go up and to the right, slowly but steadily. But it is going to be at a much, much slower pace than I think what a lot of people are expecting. And I think the more important thing to just keep in mind here is that not only are those returns diminishing, and they could really start to get much more flat here in the near term. But beyond that, I think cycle analysis is dead. We talked about this months ago, but I really want to echo this point here, which is that I don't think the previous, 4-year cycle or expanding cycle theory, which got kind of broken in the last cycle, a lot of these methods and even the data science models and traditional means of measuring cycle tops are going to start breaking. They're not going to be working. And maybe those systems in place will still be good for finding capitulation events. I'm all for buying Bitcoin during capitulation events, because if you can do it at the right time, then in that case, when things start to go back on the up and up, Bitcoin usually is still one of the best performing assets. But buying here, when we're revisiting the prior highs of the 2021 cycle, 3 years ago, practically speaking, right? And we are struggling. No, sorry, excuse me, more than 3 years ago, if you consider the April range. If you want to use November, that's fine, it's only slightly higher. But we're coming up there, and it's almost been 3 years, and we can't really catch a break. We set in slightly new higher levels, and since then it's just been distribution and stagnation. So my point here at the end of the day is, I'm not even here to say that we can't kick off a new bull market. I'm not saying we can't go up higher. But set standards. Don't try to buy, so supposedly the dip here, so many people will tell you to do, because it could just keep on dipping. I think the smart way to go about this as a trader is to finally wait until we start seeing higher lows and higher highs. Who knows, maybe we get that here, maybe we get support at 53,000, and essentially we can start to reverse higher and set higher relative highs. My big goal above all is that I'm going to be trying to make money in this market. I'll be trading in altcoins, and that is going to require a few things. So one, it's going to require that altcoins are finally trending higher, which they aren't yet. We're down here in the 200 week where we should be bouncing up strongly like we were back here, right at the lows we expected for price to come down to. It hit that target perfectly. Then it rolled back over again. We weren't bearish enough supposedly, and it went all the way down here to 151 billion. We got to bounce off there up to 229 billion, but we're getting shot down at those daily moving averages, and now we're getting real cozy in these long-term spots. We need to start seeing that change. And I'm not trying to pick absolute bottoms. I'm trying to wait until the trend is presenting itself. And that is not going to happen, in my view, in any significant way until Bitcoin gets up and establishes new highs. Because once it does that, and we can really start trending a new bull market, once those ETF inflows start picking up, or we have some new buyer, a new catalyst that gets the markets optimistic, then you can start to see optimism return. But for now, the only type of buyers who are coming in are buying during capitulation. They are not buying at those long-term daily moving averages, which used to be acting as a means of support. We saw that here with the purple lines here, which is the 100-day back here. In January, there was the perfect low point. Once we got above the 21-day as a confirmation of momentum, boom, acceleration here. Same back here, support on the 100-day and 200-day pocket. I'll just zoom in it so you guys can see it a little bit better. Right? I'll turn off the drawings. We can see very clearly here. We established nice steady support there, break above the 21-day, break above that prior resistance range of 125, boom, clear trend. That is when the easy money, the life-changing returns are made. And until that really happens, we have no reason to try to fight the trend or try to fight the market on hopes that Michael Saylor is going to buy more Bitcoin, on hopes that Plan B's model is going to work and that we're going to 500K. The model of yesterday may very well not be working today. And I want to echo that. That's not any me being negative. That's just true. Markets go through clear cycles over time. And I think Bitcoin has been through a decade-long positive expansion. Now we're getting to a very important cusp here of where's the technological advancement of Bitcoin? How many new users are coming to Bitcoin? Is Bitcoin really, in need of, essentially, are there more people who really need Bitcoin nowadays than there were, say, yesterday, or last week, or a month ago, or a year ago, or more people getting access to Bitcoin? And sure, probably those numbers are slightly moving up a little bit over time, but they are not as expansionary as they used to be. And that lack of velocity and momentum is going to hurt asset prices as a whole. And that brings me here to talking about not just Bitcoin or altcoins. It even talks about the topic of equities. Yesterday we had a pretty big smackdown, right? We've been talking, and I'll be fair to say when I get things right, when I get things wrong. I mean, we were talking pretty high about equities the other day, back on Monday. And equity prices were doing quite good compared to Bitcoin. There's a kind of growing divergence, if you will, versus the performance of the two. However, yesterday, not only did Bitcoin get smacked down as well as altcoins, but the S&P 500, the Nasdaq, all the major indices in the stock market got a pretty big slam down after we saw a spike in volatility. Well, of course, the move in the S&P 500 caused this spike in volatility, getting us back above the 200 week, back here where we were back a month ago in the early part of August. And that was mainly driven by NVIDIA coming down 9.53%. Brutal day here for NVIDIA, back down to $108 per share, looking like it's steadfast after closing below the 100-day. It's looking like it'll probably might bounce up a little bit here in the short term, but I would probably bet money that it's going to come down to the 200-day moving average. And this brings me to my point here. A lot of people see it bidirectionally, that if you're positive or negative on Bitcoin at any given moment, it's that you hate it or you love it, and that's not true. I love Bitcoin for what it stands for. I love the rules and protocol are established for Bitcoin. It's trustless. It is disruptive. It is something that challenges the world order when it comes to central bank monetary policy as a potential money debasement hedge over the long run. So I'm not against those things. What I'm here to say, though, is that my goal is to make money. My goal is to protect and preserve my capital. And if I don't see assets as a whole performing well, whether that's big tech, whether that's, the broader stock market, and whether that's crypto, whether it be Bitcoin or altcoins, I'm not really going to be making that risk. And I honestly don't think at the end of the day, guys, you should be so urgent to want to FOMO into the market on every single dip, because it can very well be that you get one dip and another dip, and it just keeps on rolling down until finally someone accumulates enough and shifts the trend. That's the key goal in markets, because you got to be willing to not fight the trend and not try to catch falling knives, but also not try to sell the absolute top. Take profits ahead of time. Be disciplined. That's the kind of stuff that's going to help you win out long term and be able to make life-changing returns. So I wanted to share this important lesson with you guys. I hope this proved valuable. And if you like these kind of insights, if you like this kind of balanced approach to how to analyze markets, I definitely recommend you guys check out the Dash Report. This is our newsletter here on the channel. It is one of the greatest ways you guys can not only support the content we put out, but we send out a 20-page plus report. We just dropped one back a few days ago, covering some trade setups, doing our monthly article, talking about major potential divergence scenario in the stock market, either a euphoric rally or a major collapse coming, and how you can essentially predict which way it's going to go off of certain market signals. That can really help you to filter that out. And outside of that as well, we have our mid-month webinar, which will be coming up later on mid part of this month, where you guys can ask me questions. We'll dive through the charts together. It's a really awesome experience. People ask great questions. It's just a great way to get really access to the greatest part of our community, some of the best members, some of the best content that I put out, as well as the content Russ puts out. If you really like his videos, definitely consider checking out the dashboard. He's got some great trade setups. And outside of this, well, if you haven't checked out Russ's content, definitely go watch some of the videos on the channel. But that's it for today's video, guys. Again, if you want to check it out, link down below in the description. You can get 20% off on an annualized subscription. But I hope this video proved valuable for you guys when it comes to this main topic of the ETF. We cannot ignore these numbers, guys. Seeing the negative month we had in April, a one-off would be okay. But if we're seeing months that are getting away from the average, which is 37,458 Bitcoin per month. That's the according average here that we have across all these months. If we cannot start getting back above that average, I have a feeling that we are going to struggle big time to be able to continue moving up in price. We need velocity. We need major acceleration of inflows to really kick off that new bull market, a major catalyst of new participants. And so far, we are just not seeing it. And in the place especially where we should be seeing it. That's it for today's video, everyone. Thank you all so much for tuning in as always, and I'll see you guys in the next video on Monday. Take care, everyone.